I hope you had a great holiday weekend.
I did, and welcome back from the Farmers Progress, and welcome AgroLiquid.
Yeah,
there we go.
Exactly. You got it all covered. Thanks a lot. All right, we have a corn trade, well, a grain complex that seems like it wants to turn around, and some maybe inside or outside factors playing into this. What do you see today, Todd?
Well, I think what we've seen, I think we saw last week, Mark, I think we saw what I would call a blow-off or a puke low, and I think in wheat and in corn, I think we've seen that. So now I think, certainly we could work a little bit lower here, but I think the bigger movement now will come to the upside. I think you're seeing a lot of outside factors that we had already priced in, and maybe they're not going to be quite as bad for the grain complex as we thought. So I think both corn and wheat will work their way higher from here, and I hope it's not too fast. I don't want to see these short covering rallies, which means we're only going to want to make a lower low again. I want to see it build the base, which I think it did last week. You can kind of watch it. It was kind of just holding along that bottom. So I think we're in pretty good shape there. Soybeans continue to be in that $9.40 to $10 range, and I would be either a buyer at $9.40 and a seller at $10 in November until proven otherwise. If we can get through this, I think we'll all be good, and we'll see better prices going forward. So I'm still friendly to space. I'm looking for opportunities, and I don't think they can find any more bad news in their trunk to make us, go even lower. That's what I think. I think a lot of this is overpriced in from a lot of the Fed news and all the other stuff that's out there. And I think that really has changed, because I think what typically happens is we overpriced what they possibly can do. And I think that's why we're starting to see that little bit of a turnaround this morning.
Exactly. Now in soybeans, 7 to 8 cents higher. Some folks saying this rain coming now, showing 2 to 3 inches, Tim and Christina, could be more detrimental than helpful by a long way for a lot of folks.
I think it would be more detrimental, but I also think, again, I'm a big believer in price action and the supply demand that comes in. And
Sure.
I think we found these levels that make sense. It ties in with the fundamental part of it. But from a technical standpoint, I think the levels are solid. And, we get the good news to go along with it. And it's amazing how we found a bottom, and all of a sudden we got the news that we needed to help push it up there. So that's kind of how it kind of works. But you always want to watch the price action, because somebody always is.
Now, one important point you make there, and I want to gloss over it, is that you don't want to see a spike higher here in any of these grains. You want a slow, steady climb is going to be better for the producer longer term. Am I correct?
Much better. Again, just a real quick revisionist history. If we look back to last Tuesday in the cattle market, we had that giant turnaround spike, and we went straight up, and I knew that was bad news. And, of course, it turned out to be horrible news, and we went down and made lows. Well, anytime you see a giant spike up in the market, that means that shorts are covering. Once they cover, the sellers are coming back in, and they're going to push them back down, and that's always a problem. And that's why we want to see a base build, have it steady. We want the market to end on an explosion like that, where we can get out and take big profits. We don't want it to start like that.
Very good. And with that, we say we're going to take a look at the livestock trade here. Todd Horwitz again. So corn up a little bit here, 0.5 cent to a penny. Beans 7 to 8 cents higher, and wheat higher as well. We'll take a break, come back and check the livestock trade, updating numbers and his thoughts in 1 minute.